Welcome to the Deep Dive.
Great to be here.
Today, we're really diving headfirst into the most critical crypto developments happening right now.
Yeah,
We've got a stack of recent articles really hot off the digital press.
literally just out.
Exactly. And our mission, as always, is to pull out those vital insights, maybe some surprising facts you might miss otherwise.
For the noise.
Right. And a lot of this is happening literally today, June 18th, 2025. So it's a real snapshot.
It really is. And it's interesting, these headlines might seem separate at first glance, but when you put them together, they paint this really dynamic picture. You see the crypto market growing up fast, shifting globally.
Maturing, yeah.
And this dive, it's not just about what's happening.
Right.
We really want to get into the why. Why does this stuff matter for the bigger financial picture?
And for you,
Yeah.
listening right now.
Exactly.
For you.
Absolutely.
Yeah.
Okay, so speaking of big developments, the first one is hitting the market today.
Yeah.
A new ETF. Let's unpack this.
So, leading the charge today, June 18th, is the official launch of Canada's first spot XRP ETF.
Okay, the first spot one in Canada for XRP.
Exactly. And for anyone following that spot part is, well, it's a pretty big deal.
Because it holds the actual XRP.
Right. The fund directly holds the asset, XRP itself, not derivatives, not futures contracts.
Which is different.
Very different.
Yeah.
And it's a significant step, really, for integrating XRP into traditional finance.
Yeah.
Get direct exposure in a regulated wrapper.
And this Canadian news, it really lines up with what we're seeing with the U.S. spot Bitcoin ETFs.
The demand there.
Yeah, the demand's been strong. Recent data shows, $217 million in inflows. Remarkable, really.
Wow.
It signals real robust demand from investors for these kinds of products.
So traditional finance is definitely adapting.
They are, and what's really striking, I think, isn't just that they're adapting, but how quickly they're rolling out these regulated vehicles. Because this isn't just about offering new products. It feels more strategic, like they're trying to control the on-ramps to crypto.
Interesting point, controlling the entry point.
Yes, maybe steering people away from, less regulated exchanges, and maybe even changing how price discovery works long-term.
That's a fascinating way to look at it. Not just access, but actually reshaping the market mechanics.
Potentially, yeah.
So given that demand, that institutional interest, is this genuinely new money coming into crypto from TradFi?
Or is it just shuffling existing crypto money around?
Exactly. Or cannibalizing other crypto funds. And, what does that mean for you if you're trying to figure out where crypto investing is headed?
That's the key question, isn't it? There's always some rotation within crypto, sure, but the sheer size of the inflows into these spot products, the ones giving direct asset exposure without needing self-custody.
Right. Makes it easier for some.
Exactly. It strongly suggests we are seeing fresh capital, institutional money, retail money that maybe sat on the sidelines before.
Because of regulation worries or maybe just the tech hurdles?
Precisely. So yeah, I don't think it's just a bridge. It feels more like a superhighway opening up for traditional finance to engage in a structured way.
A superhighway.
Yeah.
Okay, so while these new products are opening doors, regulation is obviously just as crucial.
Always is.
And we're seeing some big moves there too. The main one is the U.S. Senate approving the Genius Act.
Right, the Genius Act. Some sources are calling it a landmark crypto vote.
Yeah. And its core focus is regulating stablecoins.
Making them hold, equal cash or treasury reserves?
Exactly that. One-to-one backing. Every digital token backed by safe, liquid assets.
For stability.
Right. And the act also clearly aims to boost the U.S. dollar's role in the whole digital finance space.
Okay, so the U.S. is making moves towards clearer rules, at least for stablecoins. But if we zoom out, look globally, this U.S. move really contrasts with what might be happening elsewhere, like Europe.
How so?
Well, Franklin Templeton, the big asset manager, they put out a pretty sharp warning. They basically said Europe, which, used to be a pioneer with regulations like MiCA.
Right, they were ahead for a while.
They might soon become just a corridor through which innovation passes without ever being retained.
Wow, that's quite a statement. Innovation just passing through.
Yeah. The worry is the EU might actually fall behind the US and Asia now.
Because their rules are too rigid. Or too slow.
Could be either or both, compared to how fast the tech moves. So it really raises this big question, how will these different regulatory styles around the world affect global innovation and competition?
That global angle really brings the policy fight into focus, doesn't it?
Absolutely.
It's not just about who has the best tech anymore. It's also about who has the smartest or maybe the most attractive policies.
A policy race alongside the tech race.
Yeah. You've got the U.S. moving towards, well, some kind of clarity, while Europe is worried about becoming a flyover country for crypto innovation.
That sums it up well.
Okay, so with all this happening, new products, regulatory shifts, it's fascinating to see how the quote-unquote smart money is playing things.
Right, where are they placing their bets amidst all this?
Let's look at some predictions and moves. First, there's analyst Brad Mills. He's put out an eye-popping forecast for Bitcoin.
Oh, yeah. How eye-popping.
He thinks Bitcoin could soar to $3 million per coin.
$3 million?
Yep. A potential 100-fold increase in its market value from where it is now.
Okay, wow. That is certainly bold.
Extremely bold.
When you hear numbers like that, $3 million, what are the biggest roadblocks? I mean, what could realistically stop that from happening?
Good question.
And how much is based on, like, real fundamentals versus just, market hype getting ahead of itself?
Always hard to separate those two.
It really is. I mean, you can point to models like stock to flow that suggest long-term growth potential.
Sure.
But the hurdles for $3 million Bitcoin, well, sustained global regulatory crackdowns, obviously, that's a big one.
Mm-hmm.
Or, some kind of black swan event that shakes confidence in decentralized systems. Or maybe just a better technology comes along.
A Bitcoin killer, finally.
Potentially. It's usually a mix of real adoption trends and that market sentiment, that hype factor.
Okay.
And, it's interesting to see what some are calling smart money is doing while these huge predictions are floating around.
Right. Are they buying into the $3 million idea or doing something else?
Well, our sources suggest this smart money is accumulating certain cryptos, 3 specific ones, actually.
Okay.
Seemingly getting ready for the next altcoin season.
Altcoin season. That time when the smaller coins pop after Bitcoin runs.
Exactly. When capital flows down the chain, potentially leading to explosive growth for some alts.
So which 3 are they accumulating?
Okay, first is CRO, Crypto.com's coin.
Right.
It's apparently gaining momentum. Rising utility, they say, across trading, payments, all the Crypto.com services.
Yeah.
Ecosystem growth driving demand.
Makes sense. Number 2.
Then there's PI. It's looking for a rebound as 68 million tokens unlock.
Okay. And unlock. Sometimes that pressures price down? No.
It can, but here the idea seems to be that this unlock is tied to incentives for validators, developers.
So it's meant to boost activity.
Potentially. Activate new dApp deployments, increase transaction volume on the network. That seems to be the angle.
Got it. And the third one?
And third is PEPE.
The meme coin. Still showing strength.
Apparently showing bullish strength, yeah. Suggests that speculative interest in that sector is still pretty high.
Interesting mix. Utility, network activity boost, and pure meme speculation.
It is. And another insight here is the conviction some big holders seem to have, even when prices drop hard.
Oh, yeah. Like what?
Well, take Kaspa, KAS. It apparently crashed, 65% from its high back in August 2024?
Ouch. Yeah, that's a big drop.
Huge drop. But reports say top wallets, the big holders, just kept buying KAS through that.
Still accumulating despite the crash.
Exactly. Which suggests these larger players really believe in the underlying tech.
Kaspa's block tag, right? The fast confirmations thing.
Right. They see it as a long-term play, focusing on the tech. Its unique architecture, aiming for speed and scalability, despite that short-term volatility.
That's fascinating. Real conviction plays amidst the noise.
It really is.
So when you put all this together, these huge Bitcoin predictions, then these very specific, sometimes counterintuitive altcoin accumulations, what does it tell you about the market mood?
Well, it paints a picture of a market that's definitely maturing in some ways.
Like with the ETFs.
Right. But still highly speculative in others. Long-term belief in tech can exist right alongside wild short-term price swings and meme coin rallies.
So for you listening, it's maybe about looking past just the price.
Exactly. Understand the why behind these moves. What are the fundamentals driving accumulation, not just the chart patterns?
Right. Okay. Wow. We've covered a ton of ground today.
We really have. Quick-fire style.
Yeah. From Canada's first spot XRP ETF launching today, strong demand for U.S. Bitcoin ETFs showing TradFi's embrace.
To the regulation shifts, the U.S. Genius Act for stablecoins, Europe's worries about falling behind.
And then all those market movers. Bold Bitcoin predictions, smart money accumulating, CRO, PI, PPE, even KAS, despite its drop.
A real whirlwind.
The goal, as always, was just to give you that quick but hopefully thorough understanding of what's really driving the crypto conversation right now.
And I think what we've discussed today, it really highlights how dynamic crypto is and how it's getting more sophisticated.
Definitely seems that way.
It just reinforces how important it is to stay informed, yes, but also to think critically about it all.
Apply some judgment.
Yeah. Look at these different sources, understand the implications, the potential second-order effects, not just the headlines.
Well said. Okay, as we wrap up, here's maybe a final thought for you to chew on.
Right.
Given this rapid pace of change, we've just unpacked new ETFs, global regulation chess games, smart money making these big, sometimes quiet moves. How might all these short-term headlines actually reshape the long-term future of finance itself? And maybe more importantly for you, what's the next major tipping point you should be watching out for?
Good questions to ponder.
Definitely something to think about. Thank you for joining us on this deep dive.